Hello friends, this is E. B. Ramana before you. Today I'll be explaining section 76, that is liability of mortgagee in possession. What are the duties of the mortgagee when he's having possession of the property of the mortgager? As usual, these slides are for a reference. The section is before you. This runs into almost 3 slides. This is the section for your reference. Here it goes section. And now we come to the explanation part. What are the duties? Liabilities of mortgagee in possession. When the mortgagee is having the physical possession of the property, and what are his responsibilities and duty which he has to do on the property. One, he has, as a prudent person, as he would have been a normal person, suppose he was the owner of the property, he should take such precaution of the mortgage's property. Next, if the property is given to the mortgagee and the property can be let on rent, the mortgagee will see that he gets the best rent and the profit on the property. If there is no agreement between the party, how will the law treat regarding the income, whatever income is generated from the property? Whatever income is received from the property, the mortgagee will see that the amount is dispersed first in clearance of the public revenue, public charges, whatever government he has to pay to the government, that revenue will be cleared, and other charges, later charge to the public, what charge the revenue he has to give to the government, that revenue has to be cleared. All rent will be cleared when it is physically in possession of the mortgagee, so that tomorrow the property will not be sold. That is the responsibility of the mortgagee. Then what happens? Then next is, again, in absence of the agreement, you don't have in contract, what is the necessary feedback which the law gives you? He will have to carry out necessary repair on the property. Whatever incomes he gets from property, after clearing the above, that is the revenue, government revenue, charges, all those things, revenue, taxes, all the payment to the government, and whatever income he gets out of the property, that he will see that the property is utilized for carrying out necessary repair of the mortgagor property. Then he will not see, he will not commit any act which will deteriorate the property of the mortgagor. Then where the property is insured, where the property is insured, any loss is caused because of fire or any damage is caused, whatever amount he gets from the insurance company, that money he'll utilize in reinstating the property. Or if the mortgagor says that can be utilized for clearing your mortgage money, at instance, if the mortgagor gives instruction, that can be done so. And whenever whatever accounts he has maintained, he has to maintain accounts of what expenses he has made, what for what money he has been spent, what details of expenses has been, or elaborate statement of account has to maintain. For that, tomorrow, in case the mortgagor comes and tells him what money has been spent on for what purposes, for that he should be able to provide him a clear picture. And along with that, he has to give voucher for what expenses he has made. And of course, this will be at the expense of the mortgagor. Suppose in case he wants the details, then on payment of necessary cost, the mortgagee will have to provide him the necessary um, details on payment of the cost. And in case the mortgagee himself is in personal possession of the property, he is already in possession of the property, he is occupying the possession of the property in personal capacity, then he will have to pay the fair rent. He will have to pay the fair rent. And that rent, whatever he pays, whatever clause C and D, that in case he has to pay taxes, revenue, all that will taken care of after paying that, and after reduction of, and after seeing that, after clearing the payment of the tax, after payment of tax, charges, public charges, revenue, all those things is clear. Then your whatever amount is left over will be taken care to see that repairs are being done. And if any amount is left, will be utilized for clearing the interest part. And later, the other part of the amount will be used for mortgage money, utilized for the principal, clearing the principal money. And if amount is left over, if any balance amount is left over, that money will be disbursed to the mortgager. And in case the mortgagor deposits or tenders the money, deposits the money in the court, or he tenders physically to the mortgagee. The moment the mortgagor deposits or tenders the money into the mortgagee, all expenses, all addition, all deduction, whatever he is doing will stop. Mortgagee will not cut any more money on from the mortgage's money. This is what is there in your section 73. Then 76, sorry. Then in case the mortgagee fails to exercise this duty, which is conferred in section 76, then any loss is occasioned because of his failure, then that loss will be debited from the decree. For example, in case the he had to pay the government taxes or public charges which he has not paid, and for that the mortgagor has done to safeguard his property, that money will be debited from the mortgage's account. This is what is conferred in section 76 of the Transfer Property Act. Thank you.